Hello, folks. Dan Bird here with the Daily Scan for Thursday, June the 5th, and almost the end of the week. This is the midday market update. I am not a financial advisor, so this is for educational purposes only. And let's take a look at where we are today. It's about 11:50, so 10 minutes till noon right now. First, I want to show you where we are in the month. So here's June. This is from Stock Traders Almanac, really good service. You can see the link down here at the bottom. Oops, keep forgetting I can't do that. There we go. All right, we are right here. So the 5th of June, you can see historically the market goes up today and tomorrow, and it looks like it's going up today. It is still green for the day. Hopefully it'll end that way as well. Now let's go take a look at the 10-minute chart and see how everything is doing so far this morning. Right here for subscribers, breakpointtrading.net is the website. The YouTube channel is in the upper right, and the free weekly newsletter is right there in that little box. You can download it anytime you want from there. This is the charts page, so I clicked on this button right here for charts. And on the left-hand side, about 3/4 of the way down are the 10-minute charts. So let's take a look. First off, you can see market started going down this morning, but then turned around and went up, and now kind of going a little bit sideways for the last 15 minutes or so. So this candle is going to complete here in about 1 minute, and then we'll have another one. So we'll see that here in a second. Technology is moving higher. Let me turn this off. Technology moving higher. Financials continuing to go down. Discretionary is kind of flat. Communication services actually started going up, and now they're pulling back, and industrials are pulling back. So technology is carrying the day for the aggressive sectors. Let's see about the defensive. Healthcare heading down. Staples continues to go down. Energy still down there, kind of flat for the day, but it's down from yesterday. Utilities keeps falling. Utilities is one of the most defensive sectors, and materials is also heading down. So materials is usually where gold is found. And then if we look at the rotation, growth versus value still looks great. Discretionary versus staples looks great. Technology outperforming the S&P, semis outperforming the NASDAQ 100. Internet stocks outperforming the outperforming the sector that they are in, but just kind of flat so far for the day. And by the way, when I say outperforming, I'm talking about anything above the zero line. So growth versus value, the zero line is down here. Of course, you want to see it trending higher, but as long as it's above the zero line, it's outperforming for this period. And this period is only 7 days. So we're looking at a 7-day period and the performance over that 7 days period. So discretionary versus staples just beginning to outperform. Technology is well above zero, semi is well above zero. So that's the way to read this. All right, let's go take a look at the daily scans for today to see what we've got. And I'm not going to open all of these. I'm just going to start, and because most of them just have 1 or 2 stocks in it. So the first one, I'll show you this so you can see what it looks like. These are set up in stock charts. In stock charts, you can set up alerts. I may show you how to do that at some point. And then I have it set to send me an email. So it sends me an email in the morning. And the first one came in at about 9:30. And the latest one came in at 11:11, which is one of the reasons I like to do this after about 11:30. So here's what it looks like when it comes in. So right there, this particular scan is optionable bearish. So Tesla and utilities are both bearish for today. And I showed you utilities before. It was continuing to drop, so that makes sense. We'll look at Tesla. There's Tesla rolling over. The 5 is getting ready to cross the 21. Looks like it's making a little bit of a comeback here, but it's still lower than yesterday. Lower than yesterday's close, I should say. And then utilities right here. So I showed you utilities going down before. All right, what else? We have Magnificent 7 Tesla is on Tesla Bear, Magnificent 7 Bear. Tesla's on that one as well. The only one actually on that one. Magnificent 7 Bull there's just one on that, and that's Apple. So Apple is just barely trying to make a comeback. It's above the 21 and just getting ready to go above the 50. You can see the higher lows here. So it could be about to give a character change on Apple. So that's one you might want to keep an eye on. The ADX green is not above the red yet. So really hasn't really given much confirmation, but it looks like it might be ready to move higher. All right, next on the list, industry groups, improving industry groups. Fixed line telecommunications. So remember that when I show you another scan that I've got. Fixed line telecommunications has been going sideways, but it's above the 21 and it's starting to move up. So that's the best performing industry group today. Then we have stack moving averages. This is a new one that I just added. We've got two on here, Deere and Take Two. And I'll show you what I mean by stack moving averages. So one of my favorites over here, in stock charts, you can create a number of different views of what the charts look like. So I have one that is a daily, I have one that's a weekly, and I have one that's a monthly, among others. But I also have one that is stack moving averages. So that particular scan is looking for all of the moving averages to be stacked to the positive, stacked to the upside. And on top of that, it's looking for the 5-day to be crossing above the 10-day within the last 2 days, right there. So that is what how the scan is set up, how it's put together. So there's only two on there today. One is Deere. So these are ones to put on a watch list and maybe watch them because they've already proven themselves to be in an uptrend. In this case, it's pulled back to the 21-day and it looks like it's getting ready to move higher. The other one is Take Two Interactive right there. And this is what it looks like with stacked moving averages. Again, all of the moving averages stacked. What that means is the longest one, the 200-day, which is down here, is at the bottom. And you can see them all stacked right here. 200, 150, 110, 100, 89, 80, 70, 60, 50, etc. All the way down to 34, 21, 10, and 5. So that's the way that they are stacked. So those are all positive. If they go in that order, it means that it is confirming it is in an uptrend. And then when there's a pullback, those faster ones, the 5 and the 10-day, move below the 21-day, like they did right here. So what I'm trying to do is catch it when the 5 moves above the 10, but all the other ones are already stacked. So this one might be just beginning to make a move higher. If we look at that on another chart, you can see right there, just getting ready to make a move higher. All right, what else? IBD has a bearish stock on here, and it's HIMS. HIMS was the number one in the mid-cap group last week and had a great run, get right back up to the high over here, and then pull back. Looks like it was making a cup and handle pattern. And for those, I did a whole session on patterns, and it's in Technical Tuesday, so you can go back and look at that if you want to, but I'll give you an idea of what that looks like. So here we have a cup right there. Made it to a high over here, started to go down. All these people are stranded. For basically 4 days, it just continued to go higher, hit all-time highs. And all of these people, when it started going down, they just want to get back to break even. So when it get back close to there, that's what happened. They got back to break even. So that then and it started to pull back again. That's what creates the handle. So there is a handle. And the next thing we have to watch for is whether it can break out of what's called a neckline. Basically, it's resistance. So the way to think about this is think about all these people just wanting to break even. So that's what creates the handle. They are all selling because they finally got back to break even after this went from basically almost 75 all the way down to 25. So they just want to break even. And now they finally get the chance to do that. So that's what's happening here. All these people are getting out. Now it starts to move back higher. And of course, it looks like they got out again. But this is a favorite one for IBD, by the way. IBD loves cup and handles. And what happens is most people that understand the pattern will put their buy orders right up here somewhere above the resistance line, probably around $70. So if it goes up and breaks through that decisively, this is a failed breakout right here. Then all of those buy orders will kick in. You also have a lot of short sellers right here that were shorting back here, thinking that HIMS is a great short. And then, so if they're shorting back here, they're starting to get underwater over here. And especially if it goes above resistance, they are definitely underwater. So they put their stops up here too. And a stop for a short means they have to buy. So you have longs that are waiting for the cup and handle breakout with long buy orders up there. And you have shorts that going to have their stops hit with buy orders up there. So you got two groups of people with buy orders. So if it happens, and it does, it's not to say that it will happen, but if it happens and breaks out of that resistance and stays above it, especially with volume, then it usually will take off from there. And the distance for measuring it is right here at about 25 to 70. So 45 points. So 45 on 65 will put it to 110 if it were to break out. Anyway, a little bit long-winded, but just wanted to explain because I can see a very clear cup and handle on HIMS right there. All right, next one is optionable bullish. I've got 4 on this list. There's what the list looks like. Right here, what I'm going to do is I'm going to view all results. This is one way you can use stock charts. I'm going to save it to a chart list, which my one at the top is I just call scan dump, where I can just dump all of these stocks in. And then I can look at it in different ways. So this then allows me to look at each of these. So I'll start with Altria. There's what Altria looks like. It looked like it pulled back, but it did go above the 21. So this is not confirmed yet, and it's got overhead resistance. Here's AT&T. This is fixed line telecommunications. Remember I said that that's the industry group of all the industry groups that gave a improving signal today. So fixed line telecommunications, and now we have AT&T on the list as well. After a long consolidation, that's probably has a squeeze on it. Next is T-Mobile. This is in mobile telecom, but kind of in the same group. And this one is trying to make a run as well. Needs to get above the 50-day. And finally, Tractor Supply, which has a really nice breakout today. It's still got a lot of work to do. We can draw a trend line from the close here down to there. So that would be the breakout if it can get above about 52. You can see this right here. That is a shooting star reversal candle. They're usually very reliable. There's 4 shooting stars over here just before the downtrend. There's one right there just before the downtrend. So they're pretty reliable reversals when they come in at the top like that. But that's what Tractor Supply looks like. And that is, there's one more, but I've already shown this one. And that is my short squeeze gave me one more alert, but it's the same stock, Applied Digital. So the first time it hit was right there, and I did it on the midday update. And then it went up 25, and it was actually up even more. So about 28%, almost 30% in 3 days. If you had jumped in when I showed it at the midday update, that is a short squeeze alert. I don't get those very often. So every once in a while, they'll pop up one here. All right, that's it for today. Thanks for watching. Please like and subscribe. And I will do a session tonight after the market, an update, because we have the jobs number tomorrow. So there's some things I want to look at to see if we get a clue of what the jobs number might come in at. So stay tuned for that. I'll do one tonight. Thanks for watching, and I will talk to you later.